Each year, the IRS assesses millions of penalties against taxpayers for filing late or paying late. In order to have penalties abated, taxpayers generally have to establish that they had reasonable cause for their noncompliance, whether it be filing late or paying late. Some examples of reasonable cause could include death or serious illness, a natural disaster or other unforeseen circumstance, or relying on bad advice from a tax advisor, such as a CPA. Another way to get penalties abated is under the IRS's first-time abate policy, which many people are unaware of. This is an internal policy, and basically how it works is, let's say you had penalties assessed for 2010 for filing late. The IRS will look back at your 3 previous tax years, which would be 2007 through 2009, and if you didn't have any penalties in those years, they will generally abate your penalties for 2010. The first-time abate policy only applies to one tax period, so if you're an individual or a business, that's going to be 1 tax year. If it's an employment tax issue, that's going to be for 1 quarter, since those are done quarterly. Let's say you had a serious illness around April 2011, which is around the time you're supposed to file your 2010 tax return. Let's say you recover around May or June, but you still don't file your return until the next year. The IRS is going to look at that and say, well, we don't think that it was your illness that caused you to file late. Another example would be if they look back at your tax history and see that you actually file late every year. Again, they're going to say it wasn't because of your illness that you filed late.